Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate expert Dustin Heiner. Now, Dustin is an accomplished investor and founder of MassivePassiveIncome.com, a community of like minded professionals that use real estate investments as a way to gain freedom and time in their daily lives. Now, Dustin started Massive Passive Income from his home back in 2015 while being a full time employee, husband, and father to four children, now fifth. We'll talk about the fifth one being added here. So, a growing family and also being a full time investor, all simultaneously. And he's incredibly, what you're going to find today in the show, he's incredibly passionate about his mission to help others become successfully unemployed and never need a job again. And so, guys, it's my honor to welcome back for the second time, my guest for today's show, Dustin Heiner. My friend, how you doing today?
I'm blessed, Kevin. Good chatting with you again, and great to see you and catch up with other real estate investors, especially podcasters. You podcast and invest in real estate. We have too many, two great things together. But man, real estate investing, people have been saying right now. I mean, a lot of people have been asking me like, how do you invest with the interest rate so high, prices, blah blah blah. Well, it's when you really think about, man, real estate investing. There's no bad time to invest in real estate. There's only bad deals. If you buy bad deals, even in the best time of investing, it's still going to be bad. So I'm super pumped to share, what's working in because I'm a real estate investor just like you, like what's working in my investing as well as what I'm seeing my students do as well. And but I really appreciate having me on the show again.
Yeah, no, excited to have you back, buddy. Just let's take a few minutes here, just briefly, for those that might not have listened to that past show, might not have heard of you before, don't know anything about you. Just give us the 10,000 foot view. Take a few minutes, who you are, your background, and what massive passive income is all about.
Yeah, yeah. So uh, I started investing back in 2006, and I was solely investing for income. I wanted to make money every single month, just like you. We want to have cash flow every single month because back then people were investing for appreciation, and I didn't. And I'm really glad that I didn't because people who were investing for appreciation, speculating, hoping the values would go up, they went bankrupt. Honestly, there's so many people back in 2008 with the crash that went bankrupt, but I didn't. I was worried, but I made more money because I was only going for rentals, like rental income coming in. Well, when sadly people lost their jobs, they stopped being able to afford their mortgage. And then they had to rent because they still need a place to live. Well, my rents went up. And so now I have 30 plus properties, have 750 apartment units now, two big apartment complexes that I invest in. And so now, coaching as well is just a fantastic way to give and to help other people. And it sharpens me too. Like I'm buying properties that are subject to now. And so just being able to take my, I guess, passion for, financial freedom. That's really what it came down to. Like I wanted
Okay.
to get income and I was working a dead end job. When I call it dead end job, I was working for the government doing IT. And I would love it if you go back and listen to the last episode because I share the entire story. But in the end, I got laid off. And I got laid off after just having my fourth child. And then I had to figure out what I'm going to do. Fast forward the story, buying lots and lots of real estate, and then now have so much cash flow now where I don't have to work anymore. Now it's just a blessing to be able to have master passive income, which is everything that I do. We're just showing people how to do all this sort of stuff. But yeah, so since 2006 to now, almost 20 years, I just realized, oh my goodness. Now with apartment complexes, 30 plus single family homes, it's just a blessing to be able to now not have to work, but then come on podcasts and just help other people to invest in real estate.
Yeah. Would you say that today your business? I know that you'd mentioned the multifamily properties. I'm assuming you're like an LP in those, or are you actually involved in the day to day as well? Or is it? I
General
guess.
partner. Yeah, yeah.
Okay.
So
Okay.
general
I
partner
guess
on
the
these.
the primary.
Oh,
I'm sorry. The primary question would be like, where does most of your energy and effort, like what you're teaching, is it more related to single family and small
yes.
multifamily investments and that of large scale commercial projects?
100%
Okay.
going with actually it's the whole well-rounded investor. As I grow, I try to help people see this is what I'm doing, and then you want to jump in a part of it as well. So as far as the apartment complexes, general partner, but mostly, I if I'm investing in it, I bring other people, and so I have
Got it.
partners that do much more of the asset management, all that sort of stuff. And so building I have just lots of people that
Yeah.
wanted to invest with me. And so they said, hey, Dustin, would you want to come be a general partner, help raise the capital? And so really blessed, a couple $1 million for each property. But with that,
Yeah.
I love coaching people how to buy single family homes and then scale to where they have, let's say 10, 20, 30 properties. Because buying your first property, single family home is really hard for most people. But then there's also a transition from being like a mom and pop or a beginner investor to where you become a scaler. You start scaling your properties to maybe getting duplexes, triplexes, fourplexes, trying to get 10, 20, 30 properties. And that's where I love getting people and coaching people now. It's not, I mean, bigger beginners are great. I love helping beginners, but I get them to where they're now scaling to where they're getting into multifamily or getting into multiple properties where they're getting so much cash flow that they don't have to work a job. And then even just like playing Monopoly, eventually become an income investor. You start going for income because you have cash flow coming in. Let's now park that in, apartment complexes or limited partnerships if you want to do that, or bigger properties, just like playing Monopoly.
Yeah, no, I love that. So let's back it up a little bit for those that are maybe making that transition from residential to commercial. I mean, for the most part, 99% of our show is based on commercial real estate, and we kind of touch on all the different food groups. But what do you think? What principles specifically, from residential investing, do you believe are most transferable over to larger type of projects that you just spoke to?
There's two parts to it, but it's really the exact same thing. Number one
Mhm.
is building a business, and number two is being an income builder. So you build a business that runs itself. Most people, when they buy their first property, they just say, "Oh, I'm going to manage it myself." It's single family home. I'm going to manage it myself, so I'm going to buy it, and then I'm going to, find these online companies that they're don't get me wrong, they're fine, that they, collect rents and all that sort of stuff, and they put a tenant in there. Well, what happens is the mom and pop or the beginner investors start pulling their hair out because they're dealing with tenants and they don't have time to scale their business to grow and get bigger and bigger. And so what happens is they get stuck at this, let's say 5 to 6 properties, and then they can't continue to grow because they haven't built a business. So number one, we build a business in residential, in let's say you're scaling, you get duplexes, but even multifamily, especially multifamily. Actually, no, I say every type of investing. You need to build a business. If you don't build the business, you're doing the work yourself. There's only limited time. You're eventually going to burn yourself out. When you build a business, you have other people doing the work for you, and then you can have your time to do whatever you want. That translates into building income. Now, I love sharing that we build a business, but we also are income builders. We don't just invest for wealth. If you invest just for wealth, you may have a problem because wealth does not always equate income. But income, if you invest for income, it will always lead to wealth. So you build a business and then you have that business focus on income. Just like if you're going to be, let me give you really a small analogy or like break it down really simply. If you're going to have a candy bar business, you're buying and selling candy bars. Well, you're not going to buy a candy bar for $2 if you could only sell it for $1. You'd go out of business. You want to make money. You'd hopefully buy a candy bar for 50 cents and then sell it for $1. So you're making money every single month. And the great thing about real estate investing, let's say you didn't have 50 cents, but it costs you 25 cents to borrow 50, well, you're only out of pocket 75. You're still making 25 cents every single time you sell that kind of bar. You'd be thinking, how much can I borrow more money? And so that's what I think about with real estate investing. What we make sure we do is we build a business that makes sure it runs on its own, and then we invest for income, for cash flow every single month. Because if you don't do that, you're going to get hurt. One quick last thing I'll say, I just got back last week from taking my family on a 3-week trip through Japan. Drove 3,500 miles on the left-hand side of the road with my 5 kids, and my dad came with me, and my wife, obviously. And so I didn't even worry about any of my properties because two things. I built a business and then I focus on income. So I make money when I'm not working, when I'm not doing anything, I'm just traveling the world. And at the same time, my business runs itself. So when you focus on those things, building a business and being an income builder, then everything works out so much better because then you could live on that money and you have other
Yeah.
people doing all the work.
Yeah, no, I love that. Let's dissect that a little bit because ultimately a lot of folks think that just when they go and make an investment in real estate that they're investing in a business, right? Each individual investment can be looked at as its own, standalone business. However, to build a what I like to call is a sustainable business, something that can live and breathe even when you're not around and can even grow when you're not around. You've got the right people on the bus, you've got the right talent on the team, folks that, hopefully are even smarter than you in different departments within the organization. So let's talk about that. And maybe starting with before we get into your team, what the team looks like, the systems, the framework that you have in place that have helped you step back from the day to day. And maybe that's not day to day every day, but day to day when you're in Japan, day to day when you're, when you're traveling with the family and doing things that aren't, that you want to be able to disconnect yourself from, right? You want to be intentional about spending time with your family when you're on vacation. You don't want to be checking your email every 10 minutes. being on work calls the entire time, right? Like that's not a real sustainable business. So talk to me about those frameworks that you have in place.
The biggest one that if you're doing multifamily, you're doing residential, whatever it might be, is how do you make sure your business makes you money and not loses you money every single month after you buy the inventory? One reason why I call every single piece of property that I own, even my 355 unit apartment complex, the 325 unit apartment, like those, that's inventory that I have in my business. And so what I focus on is how can I make money every single month after I buy the property? A lot of us investors, especially when we're first getting started, we start thinking the hardest part is buying the property and then finding the right property, getting the money, all that sort of stuff. Well, that's just the start. If you cannot perpetually make money and have it work for you where you're making money and growing, like you said, without you, then you're going to be stuck because how are you going to make money? How are you going to be able? So what I look for is finding the right property managers for either apartment complexes, residential, 4 units, whatever it might be. How do I make sure that it's managed properly? And then with that, we have the property managers that we need to make sure that we're overseeing them as well. So I'll share that when you have residential, apartment complexes or multifamily is much more moving parts. But with my 30 plus properties, my daughter, who's 16 now, she bought her first property about 3 months ago. And I've been teaching her how to analyze our property management statements on all our 30 plus properties. We have short term, mid term, long term properties. But when you have a good property manager, that you've vetted, you've hired slowly, you've made sure that they're going to do the right thing for your properties, they have the right business systems, procedures, and processes in place, then perpetually they're going to be managing the property. And all you got to do is overlook them to make sure that they're not missing anything because they're human beings and hopefully not malicious and not incompetent, but sometimes things fall through the cracks. But now I've taught my daughter now. So the main thing, like we're starting with, how do you make sure you're making money every single month after you buy the property? And for me, it's the property manager and making sure that asset is taken care of.
No, good deal. So third party management is so you're not vertically integrated. You guys outsource your property management. I'm assuming it's probably is it a different property management company for your 30 residential properties than it is for your larger multifamily assets?
So great question. So I invest in 5 different states now: Ohio, Texas, Arizona,
Okay.
Tennessee, and Indiana. And so every single city, I have different property managers for my residential. So a city will have one property manager that I would build a business around that city that I could always call this contractor, this, plumber, whatever it might be. But for my residential, yes, totally different company. Especially, I think it's mostly because geography wise, it's different. It's further away from my other
Yeah.
properties. But the residential is totally different than multifamily, especially when you have 355 units, 325 units, two different big complexes. The property managers that we have for the multifamily, they've got like 6,000 units. And so they focus on that. So every time I go to another city, I make sure I build a whole brand new business there, that I have the right contacts, the right people doing all the work in every single city so that all my assets, all of my inventory make me money every month.
Yeah. No, I love it. I love it. How about you'd mentioned we're going to be all over the place a little bit. You mentioned your residential portfolio. You've got short-term, mid-term, and long-term rentals kind of all mixed up in that batch. Help me understand the thought process and how do you think through, I guess, really a risk mitigation strategy or an investment strategy as it relates to which direction am I going to take this? Am I going to take it with the short-term approach? Am I going to take a mid-term or a long-term approach? How do you make that
So
decision?
yeah, it's a fantastic question. And I'll answer it in the way that I coach all my students. So I never buy a property that I can only make money if it's a short-term property. Because there's a lot of people, especially on TikTok and Instagram, say, hey, I bought 3 properties and now it's renting for this and short term and I'm making all this much money. Well, that's going to work out well in a booming economy. When things start going bad, because eventually it will. I'm not saying it's going to do it right now, but if economy goes bad, people stop traveling, stop having vacations, and they're not going to be paying that much for Airbnb. In fact, in Arizona alone, I think there's 70,000 Airbnb rentals in Arizona. And that's just Arizona. And when you think of the glut of it, now people are having to lower the prices. So if you invest just for like, I'm buying it, I need to short term rent it in order to make money, then you're gonna be hurt. So this is what I tell my students: we make sure we buy a property and we can afford it, that it's a long-term rental. So if we can make money when it's a let's say 100, $200 a month as a long-term rental, then you then figure out, can I short-term rent it? Can I mid-term rent it? Which is, 30, 60, 90 days where you have traveling executives, nurses and stuff like that. Well, you make more money, higher turnover, a lot more expenses, all that sort of stuff. And so what I suggest is if you're going to get into midterm or short term, make sure you're buying a property because if everything went bad, long term will always be there. You'll always be able to get a tenant in long term, but you want to make sure you're making money in long term. And then if you want to upscale, which say, let's make more money out of this property. Give you an example. One of my properties in Arizona, I can rent it for $2,000 a month, long-term rental, which would be great. It'd be totally great. I don't have a mortgage on it, which is even better. So it's just all cash flow. But I said, you know what? Let me look at making this into a midterm rental. Now, fast forward the story. I have a company. They rented it for 12 months at a midterm rate. So I'm getting $3,600 a month for this property at 12 months because it's a midterm rental. So I looked to buy a property, making sure I could rent it at low or long term and still make money. But then do I want to make it a midterm, short term? If I can do that, then I'll make more money.
No, I love that. Back to your point of like the glutton of inventory that's in a lot of these markets, especially short-term rentals. One of the other key pieces there that I think a lot of folks are maybe they're aware of, maybe they're not, but just and I can't speak specifically to Phoenix. I know that Maricopa County, I know that they passed some regulatory changes in the last couple of years as it relates to Airbnbs, short-term rentals being licensed, and there was more than half of the Airbnbs were illegal basically, and they're putting the crackdown on. And I think Las Vegas was another one. There's lots of major cities throughout the country that had a lot of illegally operating short-term rentals, and so there could be risk there as well. So I think just even looking at investors looking at a potential buying into something that's already a short-term rental, right? Like doing appropriate due diligence, making sure that number one, there's runway. Actually, there's not a oversaturation of these offerings within the marketplace where you're gonna have a harder time maybe meeting your pro forma that's based on maybe historical numbers, right, during COVID and things like that, where a lot of things were inflated. But also number two, that you might not find yourself in a situation where you're getting shut down in short order because you basically bought into an illegally run short-term rental. Have you run into that in any of the markets that you're in? Just regulatory changes, regulatory restrictions, barriers to entry to operate either a short or midterm type rental?
So yes, well, I personally have not, but I have had plenty of students that have had issues, and we have to figure out how we're going to best mitigate that problem. The problem would be, let's say you can't rent it for less than 30 days, which is a short-term rental. Hotels go into the big cities and say, hey, you're taking away our money. You put some regulations and laws, and it cramps down onto the Airbnb. Well, let's look at how else can we do it. Well, there's a couple other ways. I personally have not done this yet, but co-living is another amazing one. I was actually looking to do one of my Arizona properties into co-living, but that's going to take off. Like I think co-living is the new direction of like Airbnb is going to be probably not as good as co-living, because co-living is basically you're renting out a room in the house and you're adding extra rooms, like let's say taking a living room, turning it into a bedroom, and then you have a small living space, small kitchen. But this is taking off. So when you have regulations come in that you're cramped and you're like, oh no, I can't do a short term. Well, let's figure out what other options we have. Okay, worst case scenario, long-term property, long-term rent it. Hopefully you bought it well and you'll still make money long-term. Other one is if it's 30 days or less, rent it for 31 days, which is a midterm rental, which is not bad. You're going to find midterm is really, really great. But another way, if you need high income because of your mortgage payment, if you long-term rent it and you're stuck, like I can't long-term rent it and make money, co-living is another great. So there's short-term, mid-term, long-term, and co-living. A couple other ones in there, but those are the main ones that you would look at. Co-living is actually you make a lot of money and people stay in there for 3 6 months, and as long as you take care of it and you make sure that you mitigate problems from people coming in and going and all that sort of stuff, it's a little more headache in the end, but you're going to make more money in the end if you can't short-term rent it.
Do you have any personal experience with the co-living? I've heard of the concept and the idea. I'm thinking of the logistical challenges with managing that, right? If you got 4 or 5 folks renting rooms in one respective house, it's personality conflicts, just finding good matches and just the neighbors, right? What do the neighbors
You're
think when there's 3, 4, 5 cars in the driveway?
Dude, yes, 100%. And so I personally have not done a co-living. I was actually turning one of my properties into co-living. And as I was talking to the property manager, he was saying, well, let's look at co-living because he manages co-living. And he said, if we did it for long term or midterm, so we planned it out. How much money would it make? Would it be that worth that much of a headache? When I say headache, I mean work or extra, wear and tear and all that sort of stuff. But here's what it really comes down to. Just like Airbnb back in 2015 or 2016. So Airbnb came on the market, let's say 2014, 15, 16, whatever it might be. Well, I was doing only long-term rentals. And quit my job when I was 37 years old because I had long-term rental, just all this cash flow coming in, which was great. But then I saw short-term property. So I was like, man, I want to do short-term, but I hate working. I don't want to work anymore on any of my properties. I want to hire property managers. The same thing happened and is happening now. So Airbnb came about and people had to manage their own properties. Well, I didn't do that, but property managers started popping up. You started finding property managers that realized they can make money. They had to learn how to do it and all that sort of stuff. Now we got lots of property managers that manage short term, which is great. Same thing with co-living. You're getting property managers realizing that this is a thing. So I bet in the next year or two, you're going to find a lot more property managers that do manage co-living because it's really hitting the market. And people are realizing that, the younger generation, let's say, I don't know, whatever, Gen Y or Z, whatever they're called, but the affordability is so bad for them, and they're still making just a little bit of money, and they need a place to live. And co-living, they're 100%. Honestly, like you and I, like more than I don't want to live with other people in a house, in a room. I don't want to do that. I personally don't. But this generation now, they absolutely don't mind. In fact, they like it. So all that to say, you're getting more property managers, just like with when Airbnb short term came out. They started taking over. Same thing with co-living. So, last thing I'll say is you'll be able to find a co-living property manager. That's the biggest thing. I don't want to do any of that work. I don't want to find the tenants. I don't want, but I pay them well. They manage the property. I make enough money, and we all win.
Yeah, interesting. Are there any platforms that you're aware of that are becoming prominent in that co-living space?
The biggest one right now, and I wouldn't say that I would discourage anybody, but you got to understand what you're getting into. So Pad Split, just like it sounds, PADsplit.com. That's a
Yep.
big one right now. In fact, they're kind of spearheading. They're the ones that are doing it. But they charge, I think they get 50% of the rents. It's really, really
Wow.
high. I could be wrong. It might be 25 to 50% or something like that, depending on what you negotiate. It might be lower than that, but let's just be generous and say it's 25%. It's pretty high, but then you have the property manager that takes another, let's say 10, 15, 20% on top of that. So I think, okay, now that I'm running that through, it's 50% after property management and the pad split gets, because pad split takes, they are the ones that gets the tenants and place them in your property. So
Sure.
all that to say, the biggest one right now is pad split, but you'll have more companies come on the market. I don't know of any right now, but here's the great thing. Furnished Finder and Airbnb both have the ability to find, hey, you could rent out one room for a long term. Furnished Finder is great. Traveling nurses back in 2020, they had lots of stipend or money to go and rent out an entire house. And so you would get traveling nurses for 90 days and rent out for, like, let's say $3,000 for an entire house. Well, their stipend's so much less now. The most they have is, let's say, $1,500. Well, that can't rent them a house, but it can rent them a room. So if you're going to be finding tenants to rent out in your co-living, Furnished Finder is fantastic because there's so many people on there that want to rent out a room. If you got a good property, you're going to be able to take care of them.
Yeah, no, I love it. I love it. No, interesting. I love the the pivotal changes that occur within our industry. You know what I mean? Whenever there's a little bit of a barrier or something's not working as well, let's find a better way to do it. Let's find a better way to skin that cat. Which is ultimately, how Airbnb came about, which is how this co-living arrangement came about, and there was always things like this that this world existed. It just wasn't organized, right? Like it didn't have a name. It didn't have an identity. Airbnb short-term rentals have always existed, right?
Oh,
Vacation rentals have
hotels.
always, right, or not even that, but even homes. I mean, there were property
Oh,
management companies. If you go into a vacation area, there's single-family homes you could rent for a week or for 2 weeks, right? Right, but like it wasn't an organized industry like it is now, like Airbnb did when it came to the space. Same thing with co-living. I'm sure there's houses that we don't even know of in the neighborhoods that you and I live in that where there's probably two or three or four people living there, right? That are actually renting rooms. But it wasn't an organized structure. Like it wasn't coined co-living. They didn't have a platform like Padsplit that you're talking about that helped organize the business model. So no, I think it's very interesting. I'm curious as to back on the short-term rental piece, just and I kind of saw this coming, and I don't have any short-term rentals, so I can't really speak intelligently to this, at least from personal experiences. But I just kind of saw this playing out during COVID. People weren't traveling internationally. So people were taking staycations or driving vacations, just driving to their destination, doing short-term rentals, Airbnbs up in the mountains. Like I'll use Gatlinburg as an example, right? You're in Tennessee now, and so Gatlinburg's in Tennessee. It's a very popular
Lots of
destination.
Airbnbs.
Yeah, lots of Airbnbs, but it seemed as though that market did really well, lots of demand, and so now everybody wanted to get into the Airbnb game. And it's not just Gatlinburg; it's all places like Gatlinburg, right? And now there's just an abundance of short term rentals. And for those that maybe got into that space that are still working, they're like, okay, I want to make a real estate investment. I heard that Airbnb is great. People are making money doing it. They look at the economics based on maybe the 3 years during COVID. They're like, man, we could literally pay for this cabin in the woods, make some money from it. You'll have a great long-term investment that maybe we'll go use a couple of weeks out of the year, and life will be good. Well, fast forward to today, I know that there's been quite a financial impact on the income that a lot of those places are generating. There's just a surplus of units on the marketplace, but not even that. I don't even think it's just a surplus. And I've seen this firsthand experience. I stay in Airbnbs. I travel quite a bit, and the quality of Airbnb units has going down significantly. It just seemed as though anyone thought they could just get into the business, throw some shampoo, throw some furnishings in there, the IKEA couch, IKEA cabinets, whatever it might be, and just make money hand over fist without really putting much thought or intention into designing the space, keeping up with the space, keeping up with the unit, keeping it clean. And I've seen a trend downwards in the quality, but again, just the surplus that exists, I can imagine that there's got to be some distress in that space. I mean, are you? And I don't follow the economic trends on this. I don't read news based on this. But are you aware of any distress that's in the short-term rental space as it relates to folks having to unload properties, selling off properties, what have you?
Yeah. So the distress that I'm seeing is people would be listening to, like I was just kind of jokingly say, the TikTok gurus and the, Instagram people that have started in 2021, bought their first property, and then they became experts. So they started teaching people on Instagram and all that sort of stuff. And they've only gone through a boom cycle. And they said, you can buy this house, pay top dollar or pay more than it's worth because you could rent it out and you rent it out short term. Well, here's what's happening. So it's going to happen. It hasn't hit yet, but I would bet money that this is going to what's going to happen. It's not necessarily, yes, if somebody got into an Airbnb, their total dollar amount is going to come down because there's so many, supply and demand. There's so many, so your rents have to come down. You can't rent it for $800 a night. You have to rent it for like 250. If you were running your numbers on 800 or 300 or 500, but you're only getting $200 a night or $150 a night, then you're not going to be able to make your mortgage payment. Now, here's what I'm saying. So many properties, like I said, just in Arizona alone, 70,000 properties. And these properties were long-term rentals or homeowners that lived in these properties. Now they're Airbnb. Well, people were all these quote unquote investors. They have two or three single family homes that are short term. Well, they've way overpaid. Their mortgages are so high that they're now stuck. They have to rent it for this much, but if they can't, then they can't long term rent it. They're going to get a foreclosure. So eventually, I see a great time for us as real estate investors to pick up on when people are going to get hurt. Like these people who buy short-term properties, no, and most of these TikTok gurus, they don't teach like I teach. They don't teach where I say you don't buy a house unless you could long-term rent it. And then if you long-term rent it, short-term rent it, you make more money. They don't teach that. They just teach buy a lot of money and then you'll make a lot of money. In the end, they're going to be hurt. And so these 70,000 plus properties, and there's more and more coming on the market all the time because people are still doing it. Well, I'm seeing it's not happening yet, but they're starting to get really hurt because they can't rent it for so much. Eventually, they're going to have to foreclose on the property because they can't afford it. That's going to hit the market. I think this Airbnb, it's going to be a bust. And with this bust, there's going to be so many properties hitting the market that there's more properties, which means the value goes down. We as investors can gobble these properties up. I see it happening just like in commercial. Commercial real estate, you're probably seeing this too. I just bought, it was a month ago, we closed on a 325 unit apartment complex in Chattanooga, Tennessee. Is amazing deal. We got it for $60,000 a unit, and we could resell it right now for $110,000 per unit. And we bought it because, long story short, they needed to sell. And so we bought this property. I think we're coming into one of the best times ever to invest in real estate. If you're an investor, you're watching for deals. Remember, there's no bad time to invest in real estate. High market, high interest, low, whatever. It's bad deals. We stay away from bad deals. We always buy good
Yep.
deals. But in the end, I think the short term market, it's going to be beneficial for us as real estate investors.
Yeah. Do you or any of your students, are you guys familiar with like the ADU concept, adding an accessory dwelling unit to a backyard, increasing, leveraging that to increase income of an investment? Have you guys explored that at all?
Absolutely, absolutely. And so those are best in higher appreciating markets. Let's say Los Angeles. You pick Los Angeles where it's hard to build a new house or it's hard to buy a duplex. And so you buy a house that you can put an ADU on it. But now if you're like in, let's say, Toledo, Ohio, yeah, it's probably not going to work as well. It's much more properties. But the ADU, you have to pencil it out because if you're going to build an ADU, probably paying $20,000, $30,000, but are you going to be able to make that money back? Which you probably will, because if you're renting it out and you have the front unit where, front house, the house is renting for, let's say, 2,500, $3,000, and then you have the back unit that's going to be renting for, let's say, $1,500, then it could pencil out pretty well. But any piece of property that we buy that's residential, let's say 4 units and below, we figure out the best use case for it. Like I said, short term, midterm, long term, co living. If we can put an ADU on there and it's going to pencil out, then let's go ahead and do that too.
Yeah. Last question as we wrap this up, Dustin. And this is more specifically to you. We all define it differently, but how do you personally define enough when it comes to your portfolio size, the amount of income that it generates, and what true freedom looks like as an investor?
Oh, so enough for me is when I have enough money coming in to afford my family and the living expenses. That's the start. But then I also want to keep investing. I want to keep buying properties. And so I want to have a buffer to where I can keep buying properties. And I kept pushing until I had like 35 properties. Like I was pushing, 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 and just buying more and more and more and more properties. And I'm not driven by money. One quick thing I'll say, my goal in life when I was 26, I said, I want to quit my job. By the time in 10 years, I want to quit my job. So I was really blessed. 27 years old, sorry, 37 years old, quit my job, but then I need another goal. And I needed a quantitative goal. So I said, I want to make $1 million in my businesses every year. And I kid you not, it was the worst goal ever because I'm not driven by money. It was like a deterrent actually. But then I changed it. And your question being like, when's it enough? Now I have so much money coming in that I save 90%, maybe 95% of all the money I make. I save it to buy more real estate. Now it's how do I serve more people? So instead of making $1 million, it's how do I help 1 million people to invest in real estate? Because I feel fulfilled when one of my students buys their first property or becomes financially independent, just like you. When you
Yeah.
help somebody to invest, it's not an accomplishment for me, it's an accomplishment for them. But I feel fulfilled because I helped another human being get what they want. So right now, where I'm at, I got so much money coming in that we just put it into more real estate. So, two things. Number one, how do I help more people? 1 million people. That's my mission in life is helping 1 million people to invest in real estate. But the second thing is now with 5 kids, now it's like I'm starting all over because I'm helping them to invest in real estate. Now I'll give my properties to my kids. Absolutely. In fact, it's generational wealth, 30-year fixed loan. As soon as it's paid off, it's great being able to generationally pass down properties. But now, what was enough for me is I'm now having my oldest now, 16 years old. She's buying her first property. So I'm helping all my kids. All of them want to buy their first property by 16 or younger. My 13-year-old, he's like, I want to buy my property by 15. I want to beat my sister. I'm like, okay, let's talk about it. So now it's starting all over. And so for me having a perspective of how do I help more people? And then now it's not enough because I have to have my kids, they are buying their properties because let's say in 10 years, when my oldest is 26, she'll hopefully have 10, 15 properties and not ever have to work again.
I love it. I love it, my friend. Well, buddy, it's been a lot of fun having you back here. I always appreciate you coming on the show and sharing just your knowledge, your insight with all of our listeners. Dustin, for those that want to learn more about you and your organization, the trainings that you put on, where's the best place to track you down?
Absolutely. Would you mind if I give everybody a free course so they
Sure.
can learn how to do all this stuff?
Absolutely.
Awesome. So if you text the word rental, rental, rental to 33777, rental to 33777, I'll give you my real estate investing course completely for free. I just want to help 1 million people do this. You could even go to passive income, masterpassiveincome.com/free course, all one word /free course. I'll give it to you. You get started. I've had many people like find an area of the country to invest, buy your first property, scale to 20, 30, 40, 50 properties. But you could even find me on my podcast, Master Passive Income. Just look up Dustin Heiner or Master Passive Income. Have had you on my show. I even had you on there again. We could talk more about commercial real estate and see what you're doing. But then one quick last thing. So, YouTube, you could also find me in Master Passive Income. But on Instagram, I actually been having fun reaching out and connecting with people on Instagram. So you can find me on Instagram, the Dustin Heiner, THE Dustin Heiner. Send me a DM, tell me how much you love listening to Kevin's show, getting cash flow. And then at the same time, hey, we're all in this together. At least that's my perspective. The more people that I help in life, the better my life gets and the better life gets. So appreciate you having me on, man.
No, I appreciate you coming on, my friend. And guys, I appreciate you coming here. And that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.